All right, guys, on this cold winter day, we're going to talk about a sector that is getting hot, and that's China stocks. Now, we haven't been really interested in China for a while. The sector has been beaten down. Even before the market melted down in October, we were already getting some weakness in China. It's dipped about 35% from its highs. But now we're seeing some interesting develops, especially as we get through earnings season. And we see some of these China stocks reporting good earnings. So let's take a look at the charts here. First of all, I've got FXI. This is the go-to China ETF. First thing I look at when I'm assessing China is look at FXI. How is FXI doing? And FXI, which has 25 of supposedly the top China stocks, we can see it's been really beaten down. I just talked about, being down 35%. Now, SPY, or the US market, took the big hit here in October. So if I pull up SPY, we can see SPY had been trending for a long time, and then boom, we got the big meltdown here. But look what happened in China. China was already melting down going back to early 2018. That's when it made its high and has been going down ever since, down about 30%, while the U.S. market was only down around 10% over the last 3 months. This has been down 30% over quite a bit of time here. So it's had a big meltdown, but we're seeing some improvement now. First of all, you can see here China has continually made lower lows. Every time it hit a low, it broke down. Lower low, we can start here. Lower low, lower low, lower low. Now look what happened this time. When it tested the low here, it did not make a lower low. Not only did it bounce at a higher level, it's continued to bounce and hasn't broke down. So the trend of lower lows is over. For the time being, we don't have to worry about it. So that trend has been broken. Now another trend has been broken. That's this uptrend here. And you can see normally, or not necessarily the uptrend, but after it bounced the highs that it was making, you can see here now it's bounced at a higher level, and it has cleared three major moving averages: the fast moving average, which is the 9, the intermediate, which is the 50, and now the most importantly for the trend here, the 200-day moving average is breaking as we speak, as we record this video. So we're going to watch this level very closely. If this level holds, China is in really good shape to make a run to this range in here up at 48. It's at 43 right now, and potentially even maybe 53. We're not going to make that prediction yet. But I do think if we hold this level, we definitely test this 48 level. So everything is looking good overall. Now, what do we trade here? We can trade the index itself, which is FXI. Now, I usually don't trade the underlying index because they're slower moving. I'm not going to get the percentage gains I want as a swing trader. But we can trade the triple leveraged ETF, which is going to give us 3 times the volatility. So if we pull up yen, you'll notice here yen is up 2.7% today. If you look at FXI, it is up 0.87%. So yen is going to generally move 3 times up or 3 times down from what FXI is doing. So that's really good. So if we want to make a trade, not worry about stocks and all that analysis, just trade what we're seeing on FXI, we could just trade yen. So if I decide I want to be in China, I can trade yen, enter at 22.72, and we can see here that same range is at 36. So much bigger percentage gain to get to that level that we want to get to. And ignoring these moving averages, we're basically the trade off FXI, not off yen. So the moving average that's important is FXI being above its 200-day, not what yen is doing, because it tracks FXI. So 36, you can see really big trade here. We could enter at 22.71, put our stop about a point away, and then we could have a target all the way up here at 36, which is 14 points away. That's 14 to 1 in terms of risk reward. That is insane in terms of the type of risk reward we would be getting. So I really like yen here. One really good trading idea. Now let's look at the stocks specifically. We're going to start with one of the China internet bellwethers. That's BABA. and it just reported really good earnings here, but it's coming into a resistance level, but has made a really nice move from the bottom at 130 all the way up to 168. It's already up 38 points. So it's showing a lot of strength, good volatility. Now we want to see, now that it has had really good earnings, we want to see it get up over its 200-day moving average. So let's watch to see if BABA can get up over 170. If it does that, I think we've got a good trade with a top of the range here up at 196 or maybe even 209. We'll see. The next big internet stock is Baidu. Baidu has not been quite as strong, although I do like that it's made a very, in terms of positive divergence, a very nice higher low here. And it is getting up over its 50-day moving average. Now, it has earnings coming up. I don't remember what the exact date is. You'll have to look that up. So make sure not to enter before earnings. But I really do like what I'm seeing in Baidu here, especially getting up over the 50-day moving average. If we used the 200-day as our target at, say, 213, we're talking about 40 points here. And we only need to risk we'll say 8 points. So we're going to get 4-to-1, 5-to-1 on this setup. Next one, we're going to go over 4 of the recent IPOs. IQ, which IPO'd last year, has been beaten down, but is coming back here, has moved over its 50-day moving average, looking very strong. Again, with all of these, you need to know when earnings is. Huya, almost the exact same setup, a lot of room to the upside. And then we've got Billy, which I don't like quite as much, but the setup is very strong here. Kind of tough because it's in the middle of this range here, but very strong stock. And then finally, the most recent IPO, TME. Now this is pulling back. We want to see how it handles the 9, but very strong. You could play either a hold of the 9 and a bounce here, or wait for a break of the IPO high. Now 2 more stocks, EDU. This is an education stock. Watch for it to break over the 200-day moving average. We've already had a nice breakout here. It consolidated, now looks to break. If it holds this level, let's say we get in at about 80, we've got room all the way up to 105 for a potential move. And then finally, WBAI, which is a internet gambling stock. And you can see here has broke the 50-day, 200-day moving average, holding the 9. And the high here is at 21, so we've got a good 5 or 6 points here for a target range. We only need to risk about a point to get that. So again, really get great risk reward on all of these stocks. I'm not saying enter today, but if you see a setup emerge and you really like the stock, pay attention to this area. You want to be trading China right now. Now in the trade report, we're looking to trade China stocks. Remember, go to bullsonwallstreet.com, check out the swing service. We've had a really good run here, not only during the bear market, but now in 2019. I think our trade alerts are up about 12%, while the market is up 5 or 6%. So as we were in 2018, continuing to crush the market. All right, guys, we'll do another one of these next week. We'll look at a different area that is showing relative strength.